Hello everyone and welcome to today's video. This video we will be going over volume profiles. We're going to be reviewing what volume profiles are, the key concepts of volume profiles, types of volume profiles, identifying support and resistance within volume profiles, and identifying some trading strategies using volume profiles. So first, what are volume profiles? A volume profile is a trading tool and technique used by traders and investors to analyze trading activity and volume levels within a specific price range over a given period of time. It provides insights into the distribution of trading volume across different price levels, helping traders understand where significant buying and selling activity has occurred. The volume profile is often displayed as a histogram or a vertical bar chart that is plotted on the price chart. The horizontal axis represents price levels, while the vertical axis represents the cumulative traded volume at those price levels. Each bar in the volume profile represents a specific price range, and the height of the bar indicates the total volume traded within that range. So first, let's show how to activate the volume profile within Optimus Flow. To get the volume profile up, you'll need to come over here to the Show Hide Volume Analysis toolbar on any chart. Activate that, and then you'll see a number of different options down here on the bottom. We can choose a left profile or a right profile, depending on how you like to see the data. Right now, we'll choose a right profile. And this is an hourly chart of the S&P Mini for a 3-month time period. So if we wanted to see the full chart range volume profile, we would click on Full Chart Range, activate Enabled, and it will start building the volume profile for the entire chart range that you have. So if we change this, let's say to a 6-month time period, it will change the volume profile to the full 6 months. And we can zoom out here, and now we can see the volume profile for the entire 6-month period, and we'll crunch that up a bit so we can see it. But now you can see the entire volume profile for that 6 months. Now, depending on your trading strategy and the time frame that you go off of, you can change this, let's say back to a 3-month. And if you didn't want to see the whole 3-month period for volume profile, we would just uncheck this, and we can choose current month, previous month. Any of these would work depending on your trading strategy. Same goes for left profile. We can choose full chart range, enable, and now it's going to start building it on the left side of the chart. The other option we have is a step profile. And what that allows you to do is build a volume profile for a certain time period on a step basis. So if we had, let's say, a 1-month chart on the hourly, we can choose a step profile for 4 hours, activate that. And what this will do is only build a volume profile for a 4-hour period. And then when that 4-hour period is done, it will start building a new profile. So we can zoom in to see this a little bit better. So now we can see a volume profile for every 4 hours based on the hourly chart. So before we go on with volume profiles, I think it's important to notate the difference between a volume profile and a market profile. Here I have a TPO chart. On the left, it is essentially the market profile, and I've activated the step profile to show the volume profile on the right for each day. Market profiles involve analyzing price, time, and volume to understand how prices move within specific time intervals. It helps identify initial balance, value area, and point of control. Traders use it to spot price acceptance and rejection areas on various time frames. Volume profiles hone in on volume distribution across price levels. It creates a histogram showing cumulative traded volume. Key points include point of control, high volume nodes, low volume nodes, and value area based on volume. Traders can rely on volume profile to find support and resistance, detect consolidation, and pinpoint potential breakout zones. So with your standard market profile, we can see here that it will notate the point of control. It's highlighting the value area. And when we activate the step profile for volume, you can see here that the point of control is different on some of these days, and that's because the volume profile is also analyzing volume, not just price and time. So you can see here that the point of control on the market profile is here, but for the same day, the volume profile shows the point of control here. And sometimes you'll see them match up pretty closely, but on a day like here, on the market profile, we have the point of control here at about 45.19, and then on the volume profile, the point of control is 45.28. So it's important to notate the difference on that because it's analyzing two different types of data. So before we get into the different types of shapes of volume profiles and some strategies using volume profiles to trade, I wanted to show you on a 5-second chart how these are being built. And on the 5-second chart, I came down here to step profile and activated the volume. And I've set this to 1 minute. You can set this to any time frame. So what this is doing is every minute, a new step profile is being built. When this minute is up, it will create another step profile. And these numbers here on the right are showing how many contracts were traded at this particular price. So for this minute, which started at 7 a.m. exactly, a new step profile was being built. When price came up to 42.25, we can see 86 contracts were traded, and that's represented here by the horizontal bar. When price came down, we saw more volume being traded in this area, and when it traded down to 39.25, only 30 contracts were traded. So here we also have the value area, which is set to 70%. So this step profile will indicate where the majority of the volume was traded, and it'll also show you the tails. We can also come in here to settings and activate the POC. And that just shows you where the most contracts were traded within that step profile. So now we're coming up to the end of the minute, and we can see that a new step profile is being built now. When you create a volume profile in Optimus Flow, there are 4 main points to each profile that comes up. The first one is the point of control. This is where the most volume has traded with whatever time period and area you're looking at in a volume profile. There is the low profile, the high profile, and then the value area, which is currently set to 70%. We can also change this. This is a custom profile. We can change that here in the settings, but the standard is set to 70%. Now going into the 4 main types of volume profiles and their shape. The first one is D-shaped, which we can see here. In general, it is curved like a capital D with the point of control right in the middle. This can typically indicate range-bound, choppy trade, or consolidation before a breakout. The next shape we have is a capital B. And this typically indicates that we have established a value area in a range and then broken out, and the market has established a new value area. We can also see here the low volume nodes as the market went through this area, indicating that not a lot of people were doing business in this area. Here we have a lowercase B-shaped volume profile, and this can indicate the market selling off from a previous range or a high and going to a lower value area and trading there for an extended period of time, creating a lot of volume in that lower value area. And then the last one we have is an uppercased P, which would indicate the market rallying from a previous point and establishing a new value area at a higher price, just the opposite of the lowercase b. For our last topic, we will be going over how to identify potential areas of support and resistance using volume profiles. I'm currently on a 5-minute chart, and I've activated the step profile for a 4-hour volume profile. So here we have price trading up into a new value area. It formed a range, created an intermediate high, traded down, and then took out that high with quick rejection and traded back into the range. After that, we started to see price trail off and broke below this established range. But when it came down and then came back up, it traded into the existing point of control and then sold off. So the point of control, or the high volume nodes, can typically be used as areas where price may have difficulty breaking back through that. And that's because a lot of volume was traded in this area. So in a situation like this, if a lot of traders took positions here, let's say they were long and price came down, they may have exited their position here, also known as buyer's remorse, at the point of break even. So all these buyers turned into sellers at the point of control, and that's what fueled this price movement downward. On the next price move, we can see that price came down here, established a new value area and a new point of control here at 45 quarter. And we kind of have the same scenario where it formed a point of control, traded up, and came back down to retest that point of control and rejected off that area, trading back up. So a good rule of thumb is the point of control or the high volume nodes can be used as points of resistance or support because price will most likely or potentially have difficulty trading back through those areas. So on the flip side of that, we have our low volume nodes. Low volume nodes are indicated by a valley in the volume profile or the tails where we don't see a lot of volume traded in that area. And typically low volume nodes indicate a price premium or a price discount. Price typically won't stay in areas of discount or premium for too long, because if it's a discount, let's say, and the bias is up, and let's say we have this area where price comes up and the bias is still long. If price dips below here, there's not going to be a lot of volume traded here because those traders are going to buy those prices quickly because they're viewing it as a price discount. When we see price come up here and price peaks above this high, we see that there's not a lot of volume traded up here. And that can be because prices in this area were viewed as a premium. And again, there's not going to be a lot of volume in that area if traders were expecting a range to be formed or to consolidate. So there's just not a lot of business being done up there, which is why price typically doesn't stay in the low volume nodes for too long. That is all I have for you today. I hope you enjoyed the video. For additional information, please visit us at optimusfutures.com. Thank you.